Yeah, thanks, Nick. It's a real pleasure to present here at our inaugural session with Resource Rising Stars. We're Legacy Minerals, New South Wales focused explorer, and so we really have a compelling package of new discovery opportunities. So we're relatively fresh on the scene, IPO 2 years ago, and presenting a package of projects that probably a lot of people aren't familiar with, but seeing a lot of success. And as Nick had mentioned, we've secured some pretty fantastic partners to help deliver those and add value for our shareholders. So we're based exclusively in central New South Wales. We've got around 2,500 kilometres squared of tenements, so quite a significant portfolio. We've got 8 projects, and we're targeting gold copper. We targeted gold copper when we IPO'd 2 years ago, and we've maintained our steady focus on building our exposure to those assets, and we're certainly feel like we're in a well positioned to see the growth and demand that's going to come from gold and copper over the preceding couple of years. We've got lots of projects, 8, and as part of being a micro-cap explorer with a multitude of high-quality projects is also involving some high-quality partners. We've signed Newmont on as a JV partner last year, and as of last week, we've signed a JV with Sirius or S2 Resources, led by Dr. Mark Bennett. So those two fantastic companies spending money on our ground in New South Wales. You can see there it's quite a busy map and busy image. New South Wales is a premier mining and exploration district, home to Australia's largest gold mine, Acadia, which Newmont purchased last year as well. So it's a significant area from endowment, and it's a great place to explore. Just briefly on the company overview, we feel like we're in a very, very good position this year. We've raised $3 million at the end of last year, coupled with $25 million in deals that we've secured for shareholders over the last 18 months. Gives us a phenomenal cash position for a micro-cap explorer at 13 mil. So we feel very fortunate to be in the position that we're in. Quite a tight board and our management team. We're all top 20 shareholders as well, so we're very much aligned with the interests of shareholders in delivering value in the company. That share price graph, we're trading around 13 cents, IPO'd at 20, so that's our 2-year share price graph performance. So why Legacy Minerals? There's a lot of companies to choose from in the exploration and mining space, but we certainly feel that we have some very, very strong points of difference that make a compelling investment opportunity. Firstly is that we're targeting high-value deposits. So we're looking for systems, epithermals and porphyries, that are your tier 1 type discoveries. They're host to some of the world's richest gold and copper deposits, and quite a good example of what we're sort of chasing in central New South Wales is a Sierra Negro style deposit. So Newmont have that over in South America, 7 million ounces, and they're targeting 500,000 ounces per annum to production from that district. We've secured quality partnerships that helps us leverage their technical expertise to deliver discovery success, as well as providing alternative sources of funding that are non-dilutive for our shareholders and raising money in the market. We've got aggressive exploration underway, and that's really important. Multiple projects being explored means multiple chances of discovery. And importantly, again, why New South Wales? I talked about that endowment, 110 million ounces of gold and 19 million tonnes of copper across the district. Importantly, it's a safe jurisdiction to invest. 2023 alone saw majors like Rio Tinto, BHP, IGO, AngloGold Ashanti, amongst others, all aggressively acquiring projects, joint venturing projects and pegging ground in New South Wales, and they see it as a jurisdiction, unlike WA, that's been saturated for many years, underexplored, and presents significant tier 1 discovery opportunities. So what's our strategy to deliver growth for our shareholders? Is this hybrid discovery approach. So we've got our 100% owned projects. We've got 5 of them within our portfolio, and they're some of our largest projects. They give that direct 100% upside for shareholders. We couple that with our joint venture projects that we've got with Newmont and S2 Resources. They allow us to aggressively explore. They're non-dilutive, and importantly, on both of those projects, Legacy has the option to be carried through to 20% ownership of an operating mine without a single shareholder dollar going into those projects anymore. So they're phenomenal sort of deals to get loan carried through to production for the types of targets that we're testing there. So that's both with Newmont at Ballura and S2 at our Glen Logan project. We also have Earth AI. We were the first ASX company to enter as a junior into a strategic alliance with an artificial intelligence exploration company. Again, that just provides us another avenue, another exposure to discovery opportunities, trying new technologies and trying new advancements to really try and deliver that discovery. So overall, it does put us in quite a fantastic position to deliver success. So, the JV model in Australia, although it is common, it's not all that common compared to a lot of the North American or the TSX or even in the London markets in terms of good case studies for how they've delivered some incredible success for shareholders. And probably a good notable one is Greatland Gold. Signed a deal with Newcrest at Havieron, and within a 3-year period, their share price was driven up from 100 mil to a 1.7 billion market cap, based off an aggressive program of exploration from Newcrest and the resulting definition of a 3.4 million ounce resource. So we're at that pre-discovery stage. We're at that initial stage in that value curve where we're sitting pre-discovery, and the shareholders or people investing currently in the stock now are getting that early stage upside. Importantly, we've got a very long-term view on our projects and the way we think about our business, and that back end is where that 20% carried through to production is really important. If you look at Greatland Gold now, they've racked up close to $300 million in debt and debt facilities. That's to finance their 30% own of a now Newmont partnership. By having our debt come out of future operating revenue, it does mean for our shareholders that we don't have to go to the markets to raise that money, and there's no risk for any of our shareholders on any of those projects to see us through to operational revenue from our assets. So I'll talk about Glen Logan. This is a fantastic project. We only pegged this ground last year. It was granted in November, and within 2 months we've signed a deal with Sirius. And for those that know, that S2 Resources, led by Dr. Mark Bennett and major shareholders Mark Creasy, we're targeting a Tier 1 porphyry copper deposit here. So it's 55 k's South Acadia, last held by Rio Tinto in 1994, who did not drill it. So they considered 800 metres too deep. Importantly, the advancements in modelling has shown that we're looking at that magnetic target that you see there to sit around 500 metres from surface, and that presents a fantastic porphyry opportunity. That JV, 6 million, means that we're going to be able to test that target and definitively know exactly what that regionally significant magnetic anomaly is, again in an area that's never been drill tested. So Black Range is a 100% owned project for Legacy Minerals. And we've got 2 of these systems in southern New South Wales, Black Range and Ballura, formed around the same time. And again, we sort of see a lot of opportunity in looking at projects that haven't had any modern exploration. So the last company on ground there was Newcrest, 1992, over 30 years ago. What we know from the work that we've done there is that we're looking at a vast, underexplored, low sulphidation epithermal system. So to put it in perspective, this project's roughly 3 times the size of our Ballura joint venture project with Newmont in terms of prospective volcanics. It's preserved. We're repeating a lot of the same success that we saw at Ballura that we subsequently JV'd out. So preservation, high level at the top of the system, and again applying a lot of modern geophysics and a modern geochemistry to really deliver us those breakthrough, discoveries and move towards drilling. So what's an example of one of the prospects that we've shored up into quite a high conviction drill target, Sugarbag Hill. So again, the last company to step foot on this ground, or the last geologist, was in 1992. So no one's been there since Legacy went out and started rock chipping. And we've defined a 3.5 by 1.2 kilometre long pathfinder anomaly with the highest portion of that of gold around 2.5, greater than 20 ppb. So what we're looking at there is what we believe to be the top part of an epithermal system. That's what a cross-section looks like, the geophysics. In that 300 metre wide gold corridor there. Newcrest drilled it in 1992, and you can sort of see from where they put their drill holes is that they did not hit the high grade, what we interpret to be the feeder zone targets there. So they're the red zones there, highly silicious units. So we're drilling a target like that currently at Ballura, and we're going to be diamond drilling that with our own use funds imminently. So on to Ballura. Ballura, we pegged this project, like all of our projects in the portfolio, bar our last one, as free ground. So 3 years ago, this project, no one was on it. And in quite a short space of time, we've managed to convince a lot of geologists and I guess a lot of the market to the tier 1 potential for this low sulphidation vein field. We've drilled it 3 campaigns now, and we're waiting for assays from one that we wrapped up in December. So there's ongoing discovery exposure there, and we're really expecting a multitude of drill campaigns to come out of our JV with Newmont as we step through the 30 square kilometre vein field. So you're talking about a massive project. It's a discovery-focused joint venture, so there's a strong alignment with Newmont in terms of what the size of the prize is here. In terms of that, what gave us the initial encouragement that this, had the potential to host something of this sort of size is the rock chips. So we spent a lot of time, boots on ground, systematic exploration to collect samples. We've got a few at the booth next door if people are interested in seeing. But if you're rock chipping and you're getting 55 grams gold at surface, up to 1,000 grams silver, and you're getting that over 15 square kilometres, so just limited by the work, the areas that we've gone, you're talking about a large mineral system, and that gold has to come from somewhere. And so that's what we're doing at the moment is drilling and trying to unpack where the feeder zones are for this system. And importantly, in the drilling we did end of last year, fantastic proof of concept that we've got a preserved epithermal system in the textures that are in the rock chips. Won't mean a lot for non-geologists out there, but some of those drill core textures there are really globally significant in the age of the system and the preservation potential. And if you've got a preserved system, it means that you've got potentially your economic zones that are preserved at depth. So currently, we're aggressively exploring across the project at the moment. So we're doing some of the largest geophysical programs ever done in New South Wales, but building a really high quality data set. So we're collecting lots of geochemical samples. We're doing geophysics, geochemistry at a broad regional scale. We completed a 7,500 kilometre airborne radiometrics and magnetics, but then we're also doing that on a smaller prospect based. And so what that gives us is drill ready targets, but also a sustained pipeline of targets across the portfolio. So there are two field teams out there currently at the moment taking samples. So on to Drake. Drake is another low sulphidation epithermal system that sits in northeastern New South Wales. So again, we focused all our projects within New South Wales. It allows for a real logistical efficiency that we get. We're the manager for the Newmont project at Ballura, and we've set up a real central base of operations in New South Wales in which to run all our projects. So we don't have overseas travel costs, we're not operating in foreign jurisdictions, we're dealing with the same members of government for permitting and applications and drilling. So it's a very streamlined, efficient company. So it was a natural progression for us to pick up this project. This has been the only project that Legacy has ever paid to bring into the portfolio, and that was for $200,000 off the company called White Rock Resources. It's been explored extensively, but with a real focus on getting a small, roughly 600,000 ounce gold equivalent mining operation into production. What we saw up there was an untold copper story. So when you're looking at copper grades, 18 metres at 5.8% from 52 and 10 metres at 7 from 88, so that's the same drill hole. Never been followed up, there's never been further drilling, and that was never included in any of the resources. So what we're looking at there is a different strategy, a new approach. So again, trying to collate 30 or 40 years worth of exploration in old data sets into a new modern database, implement modern geophysics, and repeat the same sort of success that we've had at Ballura and Black Range in terms of developing a tier 1 potential opportunity. That historical focus on mining and the silver and gold has meant that it's left the porphyry copper gold potential of this system untouched. And when you look at a caldera, which is the rim that's outlined by White Rock in that image there, that caldera size, which is roughly 120 square kilometres, you're talking about a large Pacific Rim type scale, that if you were to think of a Porgera as an equivalent sort of footprint. And what's quite exciting is just the sheer number of prospects across that 120 square kilometre caldera structure. We got that for 200,000. We think there's around 20 to 30 million that had been spent on that project to date. So we've got the exploration licences unencumbered, there's no liabilities, and pure upside for our legacy shareholders. So to summarise, It's going to be a very, very exciting year in 2024. We're fully funded to be drilling across multiple projects. So we'll have 4 different projects with multiple campaigns on each of those drilled this year. We've got a long-term focus on gold and copper assets, as we really see those having a strong performance over the coming years. We've secured funding with multiple price catalysts, so that's funding from the market as well as through those quality JV partners that are really delivering value for our shareholders currently. So if you want further information, we'll be next door, Tom and myself, the exploration manager, and more than happy to share the story. Thanks.